Thank you everyone for coming to this session today, Museums, Incubators, and Accelerators. Before we jump on in, Nancy, I'd love to have you introduce yourself, Sina, and myself. We'll get going.
Hi, I'm Nancy Proctor. I'm the director of the MuseWeb Foundation, which is the new nonprofit initiative from Museums in the Web conference, which I've been co-chair with Rich Cheria for the past 5 years.
Hi everyone, my name is Sina Brahm. I run a company called Prime Access Consulting. Most of you might know me for work on inclusive design and accessibility. When I'm not doing that, I tend to wear a different hat, which is due diligence for venture funds and technology startups, as well as advising early stage startups on those matters.
And I'm Brendan Sieco. I'm the founder and CEO of QZam. We work with museums to help them engage their visitors using digital. I've invested in startups, advised startups. I'm the founder of my own startup and have been through an accelerator. So we're gonna have a lot of fun little things to talk about in the moments to come. So we do have a little technical difficulty with the presentation, but we're gonna do this a cappella and hopefully the AV person comes to the rescue soon. So startup accelerators have been a huge part of helping early stage companies build, fund, and bring to market new ideas and products. There have been countless startups yielding unicorn status valuations, which means billion-dollar companies like Airbnb and so on, that credit their rapid progress to programs like Techstars and Y Combinator. These programs run early-stage companies through a 3-month boot camp, infusing them with capital, space, resources, and access to expert mentors to help them do more faster. So in recent years, we've been seeing museums incorporate some elements of startups, incubators, and co-working. We can look to the new museum, Acme, and thruPapa, who took the models of these concepts to bring together entrepreneurs, hackers, cultural practitioners in hopes of driving new innovation. This inspired us to explore the topic and discuss various ways museums can learn from the startup community. So why are we comparing apples and oranges, Nancy and Sina? It seems like a pretty crazy thing to put side by side.
So I actually was really inspired by reading Eric Ries's The Lean Startup, which is a great book on agile processes and how they can be applied to organizations. And when I read his definition of startup, it struck me that it did actually a very good job of describing even 100-year-old venerable institutions like museums. And this is the definition that he writes. A startup is a human institution designed to deliver a new product or service under conditions of extreme uncertainty. Now, I don't think there's much argument that museums, like the rest of the world, are living in times of extreme uncertainty, but I think one of the things that we're seeing very strongly at this conference is how we're also trying to deliver a very elaborate and complex array of new products and services in order to better serve our existing and our new audiences. So I think really, even though we might have been around for a long time, museums really are functioning in startup mode, whether we know it or not.
To echo off of that a little bit, this idea of having agile practices being applied regardless of the impetus, and we're going to be talking about various impetus that exists for startups versus museums throughout this hour, is one that's pretty key. When you look at the way that startups attack problems, there is a willingness to fail forward. There is an iteration strategy that is heavily embraced, and looking to them as models of dynamic problem solving as opposed to feeling that you have a great deal of time on your hands, I think adds an avenue towards innovation that doesn't always exist. Another point to look at in terms of why looking at startups and early stage companies and venture funds and things of that in the context of the cultural heritage sector is that we're living in a time right now where even large endowments and other previously thought of financially secure institutions are experiencing not great growth. I mean, I think there was some data we were discussing just before this talk in terms of 1% growth sometimes in terms of certain endowments. And from a business point of view, that basically means that you're losing money every year as opposed to even being able to tread water.
So onto the formal definitions of what exactly is an incubator, an accelerator, or a co-working space. We'll start with incubator. There are a lot of things calling themselves incubators and accelerators and using the terms interchangeably. But essentially an incubator is a startup factory, basically a foundry where you throw together a lot of experts in their field, people of varying successes in the past with companies, and you spin off companies based on what looks like it's picking up the most traction. So back in 1996, over in California, there was something founded called Idea Lab, and they've spun off about 45 acquisitions and IPOs from 150 companies, turning $1 billion into $10 billion. And that's been really interesting to see museums take up similar concepts, but more so in the mindset of acceleration. So many of you might know about Y Combinator, Techstars, and 500 startups. Yes, let there be light. Oh, fantastic. So many of you might be aware of the companies, the services you might use on the day-to-day coming out of things like accelerators and incubators. If you've used Uber, that was brewed up at an incubator, a startup factory founded by one of the creators of Foursquare. There are also people like BetaWorks spinning off companies. You've used Bitly. I've seen Bitly links left and right in these presentations and in this community. That's a product of BetaWorks over in New York. And a more recent example is Blade. It was founded by the creator of Kayak over in Boston, where basically he was given $100 million to create new and interesting companies and spin off the most successful ones. But accelerators and seed accelerators take a very different approach. They take companies, early stage companies with an idea, a product, a little bit of traction, throw capital and other resources into the company over this boot camp structure I mentioned earlier. So it's a little bit of what's called mentor madness, hitting various milestones, and then your debutante's ball demo day. And New Inc. does this, TapeOp does this. We'll talk about specific examples in a moment relating to that. And on the topic of co-working, New Inc. at the New Museum is a great example, and we're seeing those pop up at museums like Acme over in Australia. So New Inc. is the first museum-led incubator. And Nancy, I know we've both had conversations with Julie. I'd love to hear kind of your take and your impressions on what this means for the cultural arena.
Yeah, so I guess I've had the sense for a number of years that we really need to be exploring new business models in the museum sector if we're going to remain viable as financial and cultural institutions going forward. So I've been doing research in the past couple of years into some new models that I've seen. And one of the very first that caught my eye was New Inc., which is, they call themselves an incubator that is co-located with the new museum. Essentially, to go back to Brendan's definitions, they're really more of a co-working space with some added perks. That is to say, the new museum is not taking an equity stake in any of the companies that are resident in New Inc. They take on a new cohort of I guess, tenants, if you will, every year. And so they're now moving into their third year, their third class. And they're looking for companies that are in the creative sector and which will benefit from being co-located with a museum and having greater access to the collection, the expertise of the museum staff, et cetera. And I see Doron from New Museum in the audience. If you'd like to chime in on anything, please stick your hand up. But yeah, essentially the residents in New Inc. Pay a membership fee. There are different kinds of memberships which give them different kinds of access and amounts of space within the museum. But it does mean that you've got a lot of really smart, creative young people and some not so young people with their startup businesses, both infusing the museum with their ideas and soaking up the culture and the knowledge of the museum, and not just its staff, but also its board and the sponsors and donors who circulate around the museum, who are often themselves business leaders.
So moving to another region of the world, we'll look to ACMI, where they want you, members of their community, curators, programmers, producers, and so on, to join them together in this idea of collaboration and cross-pollinating departments. So they have a program very similar to New Ink at the New Museum, where you join to become a member and you're kind of shoulder to shoulder with various individuals in ideas to spark innovation. So, you know, there are a lot of awesome cases of these co-working spaces and a lot of things being generated, you know, pushing for innovation, collaboration, and cross-pollination. Do you think we'll see museums opening up co-working spaces? Is this viable, and why might it be a good or bad idea?
Yeah, I think it's a great idea for a few different reasons. You know, in the Acme X example, it was a very creative solution to a space problem. Like so many museums, the museum wanted to use as much of its available gallery space as possible for the public. And in fact, the kinds of facilities and the kinds of spaces that the public needs are different from what the staff needs. So when they needed more space for staff, they realized they couldn't really afford on their own a whole new building. So they rented something and then sublet to startup companies in the film industry. I'm not sure if we mentioned that this is the Australian Centre for the Moving Image. So, you know, you can imagine there are a lot of interesting startups in that space right now. And so the museum staff and those startups are sitting literally side by side in a co-working space. So it helps the museum with a very practical need in terms of defraying the cost for that space, but it also means that, again, there's this cross-pollination of idea. You can also imagine the opposite, where there's a museum that has more space than it needs. We know that space rental is already a major kind of revenue stream for a lot of museums, so it's probably not a very hard thing to start subletting office space in the same way, perhaps, that we rent out gallery space. This is going to vary depending on museum, but I think even beyond the kind of financial benefits that there might be to co-working, there's some really important cultural ones of having, you know, as we all know, sometimes the biggest barrier to our getting things done in our museums is our cultural ones, are, you know, that, well, we've never done that before, we tried that 20 years ago and it didn't work, so it's not going to work today. It's really an attitude. And I think sharing space with other sorts of organizations can help profoundly change that culture and perhaps even cultivate relationships with these startup companies and their entrepreneurs that can yield in, you know, 10, 15, 20 years a really engaged patron who perhaps has gone on to be incredibly successful and remembers with fondness their early days getting a start in your museum. So I can see a lot of potential benefits there.
I was going to add a comment to that as well. So I think there's some additional benefits from the idea of co-working spaces where you have technology companies especially and other service organizations alongside cultural heritage organizations. A lot of the a sense that occurs when I talk with different colleagues in the museum space is that there's a sense of technology companies not understanding the specific needs of the museum or the context in which, let's say, an experience needs to be developed and how that's different than for a startup or for another company that might be consuming those services. And these co-working spaces have the advantage that Nancy spoke of cross-pollination, but also of realizing that the context of those problems can be easily discussed and experimented with rather rapidly in the development process, as opposed to after they've been designed, marketed, commercialized, costed out, and then being attempted to be applied to problems in the museum space. The converse of that is true as well, which is to say that museum professionals getting an understanding of the technology design process not to the aim of doing it themselves, but rather infusing their understanding, or rather, I should say, informing their understanding of technology with the realities of what is possible, how things are designed, and then promoting co-design between those two parties.
So if we look to the physical makeup of a co-working space, you'll often realize you're shoulder to shoulder with other people in your team and other companies. They're, in many ways, have gotten rid of the idea of cubicles and offices. Do you think that in the years to come, and there are probably different museum departments, with this in place today, the idea of getting rid of some of those physical barriers that represent hierarchy or limited access will come into play? Because I could see that really promoting cross-departmental conversation and a feeling of a flatter organization, at least instilled from a physical sense.
Yeah, museums are not only siloed, each one fervently believing that they're their own special snowflake, but they're siloed within themselves. So, we find often a huge cultural gulf between, say, the curatorial division and the digital division. And so I do see just that physical rearrangement of space perhaps helping to break down some of those barriers and it promoting greater understanding and collaboration across staff.
Great. And now on to what we could describe as the first ever museum seed accelerator. Looking to Mahuki at Tapeopa, there's an example of a museum taking their funds and investing those funds into early stage companies in exchange for equity in those companies. So there are a lot of things going on there, to be described and discussed. There's museums looking outside of the traditional museum in-house community to other companies, to third-party partners, to help them solve a certain challenge or problem. But in the mindset of sharing that solution globally as well. And so I find that to be really fascinating, and pairing that with this new financial mechanism that's never really been explored in the past kind of leads us to the question is this a good idea? Should museums be investing in early stage companies? It's risky.
So I think that the measure of risk is one that we need to contextualize. So museums already these days, in the form of their endowments, invest in private and public equity stocks and other financial vehicles, as well as have real estate holdings and et cetera. So in the context of risk, early stage startups, have a little bit of a higher number associated with them. The thing that tempers that, though, is the longevity of a lot of these institutions. When you've been around for decades as opposed to a year or two, the dilution of that risk can be something that you need to contextualize because the benefits are somewhat worth it. When you augment that with the understanding that this isn't just trying to place bets that you think are going to go successfully. That's not the point of this type of investment. It's investing in services and ideas and companies and individuals that are going to be collaborating with you on achieving this mission. There's a lot of synergy to be realized there. The other thing is diversification. Just having some exposure to these early stage companies allows, I think, two things to occur. One is the straightforward definition of diversification, just in terms of different assets. But the other one is this idea that you're infusing and surrounding these startups with the problems that are important to a museum. And so when it comes time to pivot, because it turns out, you can ask a lot of startups this, the idea they went into when starting the company is not always the one that ends up becoming successful or the major problem they start solving. But when they look around to solve other issues, you look around on the issues that are close to you and your friends for the most part, the core expertise, that innate expertise that you have. And those deep unresolved needs need to start coming from museums so we can see more companies servicing that sector as an ambitious problem-solving approach, as opposed to simply, museums are another type of client we can go get for because we make websites or because we do digital displays, et cetera.
And Nancy, you had a lot to say about the short-term and long-term impacts of this type of relationship. I'd love to hear more.
Yeah, I think I alluded to some of this earlier, which is even if the company that you're incubating or co-working with doesn't succeed initially, chances are a certain percentage of those companies, their founders and leaders will go on to be successful business people. And so there's kind of a twofold investment in forming those relationships. I think this is the thorniest question, and it's exactly why we've only seen one museum take the plunge and actually start investing in startups so far, and that is Te I think it's worth noting that it's only $1 million New Zealand dollars. It's not a huge, in the big order of things, it's not a huge amount of money. I would be very surprised to see museums starting to invest their endowment funds in startups. I think those investments just tend to be incredibly cautious, and that's part of why we've seen such a low rate of return lately, because the global economy has just been so slow. However, I could certainly imagine an entrepreneur on the board who believes in this model and believes in the startup sector, perhaps providing the seed funds for a museum to invest, or even gifting some of those investments in the same ways that we see certain funders gifting stocks and other equity to the museum. So the short answer is I don't know how this is going to go. I suspect the number of museums who will actually go this far is going to remain very small, and yet they might be significant in terms of their impact on really how museums do business in the bigger sense.
Yeah, and there's a pretty new phenomenon, kind of on the note of a company gifting stock to a nonprofit or a cultural institution. There's this thing called Pledge 1% that was started by Mark Benioff of Salesforce, and he encourages early stage companies, in the earliest days of their inception, to pledge 1% of their, equity, 1% of their time, or 1% of their product to good causes, to mission-based organizations. So I could see that being a really important, a really interesting thing for institutions to look at. There are a lot of people deciding to work with B Corps because of their social benefit, and there are a lot of companies deciding to look for companies that have a kind of a triple bottom line or a bigger social impact.
And when you think about inclusivity, this could be a very powerful tool for a museum to not just talk, but act on their interest in engaging audiences, in new audiences and existing audiences in new ways by investing in startups that, might represent those sorts of values of diversity and inclusion.
Yeah. So now that we've, kind of laid the foundation of various definitions, what's an incubator, what's an accelerator, what's a co-working space, who are some of the museums out in the field globally incorporating some of these mindsets, we'll return to our original question and jump to, what can we learn? And really the answer is clear: more ping pong tables, Red Bull, Soylent, and move fast and break things, especially move fast and break things. That should be a poster in every Kunstkammer, every museum office. No, just kidding. So some things that I've learned going through Techstars over in Boston was this idea of setting key performance indicators. So the thing that's quite different is usually you set KPIs on a monthly or quarterly or annually time frame. So imagine taking that and reducing that down to weekly and having to share that publicly with investors, advisors, directors of the program and your peers. It's scary. It's terrifying. So that was something that really acts as a kind of a forcing mechanism or a motivator for you to set the bar very, very high. So to create stretch goals and find a way to meet them. And if you didn't meet them, you'd have a peer group to assess those things, whether it was shipping a product or customer development or different exercises. Having accountability in a public capacity has been incredible. And that's when you're seeing companies do 25% week over week growth, 100% week over week growth, is when you take something where you'd set your sights out a month or a quarter and have to reduce that time and really condense time and space. So Nancy, you saw something really cool in Shanghai that we were talking about a couple days ago on the topic of public transparency to all of these different metrics.
Yeah, I've never seen in the museum sector a kind of a dashboard of the sort that you described, Brendan. I'd love to hear if anybody in the audience has. It does sound like both an exhilarating and a terrifying thing. But what I have seen in China is a dashboard created for museums to have in their back office, so in the staff area. This is one that they installed at the Shanghai Museum of Art. And it's been created by the Wonders Group, and it pulls in real time all sorts of different kinds of data about, in this case, we're looking at a particular object. We've got conservation status, environmental monitoring data being displayed, where that object has been exhibited around the world and in China, and also engagement with that object, both in the museum, so they're using heat mapping and looking at data on the, essentially the multimedia tour use to see how many people are kind of listening to interpretive content about this object, and also how it's being engaged with online, through the online collection and through social media. And so reporting all of this data in real time. Now, I mean, you can imagine this is a Herculean effort to pull all of this together. And at the moment, I think it's not surprising that this was done first in China, where there is such enormous person power available to just capture all this data, and then the technical skill to pull it all together. But I think this is perhaps just an image that I wanted to show to give us something to think about as a model for how we might report this kind of information, not just to staff, but to a broader range of constituents, including our audiences. And I would also say we should look back to what IMA Lab did so many years ago with their dashboard as a really good model to learn from as well.
And I love that their dashboard is still online. It's incredible. So one of the other things that's crucial, kind of a crucial underpin to the way startups, especially ones that go through these accelerators and incubators, is the idea of mentors. So as an entrepreneur, you're in many ways obligated to return to the community after you've been, after you've become successful, to kind of usher in the next generation of tech companies. And so at Techstars, it takes a very mentor-driven approach where in your first 2 weeks, you have 90 meetings with people that have started companies like Brightcove, the founder of Android, and so on, to rip apart your idea, build it back up, and give you advice. So that access isn't just exclusively available to the CEOs and the founders of the companies, it's available to all. And every member of my team has access to someone that they can point to assist them in professional development. And it's been incredibly valuable in the startup community, this idea. So I'm curious what could be learned from this. I know professional development and this idea of kind of coming back once someone's become a director, 20 years after starting at the bottom and working in a specific department, to come back and to mentor and to really assist and help develop the next generation.
Well, I think that the mentoring question has a few aspects to it. One is building on previous experiences and being able to just have that shared experience with the individuals you're mentoring. But the other aspect is bringing new perspectives to the museum. So to build a little bit on what we were talking about earlier with respect to successes that have come from different fields, from startups being able to share those learning experiences with museums. I think that you're in a period right now where we're basically asking the question in this entire hour of what are those things that these two different classically separated groups of people can learn from one another. So when we talk about mentorship, I think that same thread of cross-pollination needs to exist. It doesn't mean that someone who is incredibly successful at business is going to have all of the answers to problems that are facing museums. Nor does it mean that someone in museums that's incredibly successful, very well respected, is going to necessarily be able to answer all of the questions facing an early stage startup. But I think that having those conversations occurring not only through the lens of mentorship, but also through the lens of encouraging this rapid growth, this weekly exposure of KPIs, for example, to fail forward and iterate on ideas is really important. The other aspect of it, I think, is that it lends itself to having an impetus to just try things. We have this dichotomy with respect to museums that it's a long-lived organization, but also we're going to run out of money next week. And so teasing apart that a little bit and realizing that startups face a lot of those same problems, I think would be one shared area in which things could be learned.
So Nancy, as a veteran in the museum space, did you have mentors? Were there people advising you or people who have kind of flown before you, kind of looking back and helping you kind of see what they have seen, learn from what they have experienced? Is it a common thing in museum practice today?
I think it's growing. We certainly see it at this conference with things like, Women Who Code, that movement and the Muse Women movement. And I would say just the community around conferences, like MCN, has proven itself over the decades, really, to be incredibly generous about sharing knowledge and expertise and mentoring its members within that field. Outside of that community, however, inside the museum, I don't think it's been as easy to access that mentorship. For example, in theory, you might argue a museum board is meant to do exactly what your advisors and your mentors in an incubator or an accelerator should be doing for a startup company, providing advice, bringing in real-world experience. In reality, I think in most museums, very few people on staff, other than the director and maybe the senior level staff, have access to that board and therefore to that expertise. So here again, I think the model that we've seen in the startup sector, where it's a much flatter, more democratic, if you will, kind of community, really would serve professional development needs. And this is, again, a big theme of this conference of, what is the museum's responsibility to put every resource at its disposal in the service of developing its staff professionally. And I think we could do a lot better in terms of giving staff access to the expertise of the board and other advisors. Ultimately, though, I really loved something that Nick Honeysett said in a session earlier this morning. Being an entrepreneur isn't about having all the answers. It's about knowing how to get to the people who have the answers. So I do think there is a huge part of this which is about building a personal network and knowing where to find those people. So that's something that, again, both museum leadership and organizations and events like this one can really help put at the disposal of museum staff.
And another big element of being involved in a startup is this concept of runway. So after a startup raises a little bit of money, you have this ticking clock about how long you'll be able to exist for before you have to call in failure or go out and raise more money or pivot very hard. So do you think this idea of this ticking clock could be a motivator, a prompter of new things, or something to create a sense of urgency within the museum community?
So I think it's a double-edged sword. First of all, I would say every museum is constantly in fundraising mode. I don't know that there are any museums, although recently I had the great pleasure of meeting the directors of some children's museums, which do seem to operate on a very different business model from, say, the art museums that I've been part of, where they really are having to earn every year 98, 99% of their income. Those exceptions aside, there are very few museums that actually are self-sustaining in the way that a viable business has to be, every year earning the money through earned income activities. We're always fundraising. And the double-edged sword of that is, yes, it keeps you on your toes, but I think it also engenders a culture of poverty of always assuming that we can't afford to do something. So this goes back to those kind of self-imposed limits of a culture in a museum. So I'm not sure I see any great benefits that we can take away from the startup concept of runway. In some ways, it feels more like a sword than a shield right now.
The one dichotomy is the thing I alluded to earlier, which is that long-lived versus this pressure for every week. And I think that the one thing that might have the ability to act as that same pressure, but not be reliant on, oh, we're going to run out of money, is this idea of sharing those KPIs, and is this idea of holding yourself accountable to previous successes, and trying to at least bring into the museum a more rapid movement towards solving problems, as opposed to a need to do so before the next quarter, or a need to do so before the next year. So just bringing that sense of urgency, regardless of whether it's coming from a runway concept, which is what a startup is beholden to, or whether it's coming from a measurement against previous wins, but done so more rapidly, is the distinction that needs to be explored there.
Yeah, I mean, the thing that strikes me as so interesting about this whole runway concept is that if you go through Y Combinator, you start every email to your team, every email to your investor, every email to the Y Combinator community with the words default dead or default alive. Basically, hey, we're doing great, or hey, we need your help. And it's just a really transparent, interesting way to kind of walk around naked, if you will. Like in many ways, you're so exposed. And the next question here is, the term venture philanthropy was coined by John D. Rockefeller in 1969, and it describes someone who's an adventurous approach to funding unpopular causes. So venture philanthropists are highly engaged, and I'm so excited to see Peter Alt in the crowd from the PMA, because I'm expecting a great question, just seeing how Jerry Wind is this firecracker on your board over there. And so highly engaged, and they demand measurable performance, just like an investor, just like a board member of a museum or a startup. So this sounds wildly exciting, but very, very scary. So Nancy, I know you've dealt with boards in a lot of different capacities. Have you encountered this venture philanthropist?
Yeah, and I think we're going to encounter this venture philanthropist more and more, and so we need to get used to it and figure out how we work with these people, because one of the reasons why I think the cultural sector is in crisis and needs to be looking at new business models and new ways of doing business is because the philanthropists, the wealthy individuals, in many cases, who have traditionally sustained venerable institutions because their father did, their grandfather did, and it was the right thing to do for the community, are frankly aging out, dying off even, and their children and grandchildren do not necessarily give in the same ways for the same reasons. And there have been some arguments that the millennial generation, when it gives, is looking for participation, they're looking for causes, and they're looking for outcomes in a very different way than preceding generations. So it's a much more demanding way of serving a philanthropic community and working with them, but I just think it's the reality that's coming down the pike very quickly now.
And that's a movement. I mean, that's a movement you're seeing. So, like when millennials look at products and there's a story attached or a narrative attached, you get far higher engagement rates and far higher, just rates of purchase, whatever the case may be. And whether or not we agree with that or think that that's a good idea is really beside the point. As these individuals become older and more successful and vested, hopefully, in museums and in cultural heritage organizations, those are the expectations that they're going to be bringing to their funding. And it's not going to be sufficient just to see your name on the wall, like Nancy was saying, or to be named after, have a gallery or something named after you. It's going to be, where are these dollars going, and how can I even be a participant after the investment occurs. And you're seeing that, by the way, in venture funds as well, where some investors are not happy to just write a check every quarter or every year. Instead, they wish to be part of the process and bring their own expertise to it.
So have any of you in the audience encountered a venture philanthropist on the board? I see a couple.
I'm gonna
See a
pass
couple.
a,
Yeah, I mean, I'd love to. I mean,
flip the
Peter,
switch
is it
on.
okay if we pick on you a little? Just kidding. So, I just so Jerry Wind is this rock star professor at Wharton on marketing and is on your board and is so hardcore and so intense and so excited. And you guys have access to him in a remarkable way. I'd love to hear about some of your interactions and how that might differ to a more traditional Philadelphia patron.
That's a very interesting question. So I directly do not interact with him at all.
Okay.
So that's again like the hierarchies. I think we are too far removed from that. So it happens more on the management level.
Is that mic not working, or?
It doesn't seem like.
Flip this switch on the bottom, just for purposes of the audio recording.
Or maybe talk more closely into it. Let me see if I can. No, all of these are wired.
It's fine. Okay, go.
It's for the recording.
Recording,
Yeah.
so it doesn't work.
There
Oh,
we go.
perfect.
Okay.
Talk closer to it.
So I'm not directly interacting with John Wind on any level. So it's more on the hierarchy that management or like our directors are communicating with him, and I would love to have more interaction directly in that sense to foster like more collaboration and really open up the museum to a lot more people who really want to experiment with technology, with accessibility and these things.
Great. And Sham, I think I saw your hand as well. Would you be open to sharing some of your experiences?
Oh, thank you, Suze.
Thank you, Suze.
So we have a funder who it's a little bit of a mixed bag, because on the one hand, the foundation has been around for quite a long time in Dallas and has funded a lot of traditional sort of activities. So in that way, it's similar to some of those, Nancy, like you were saying, some of these more traditional philanthropic models where they give. But on the other hand, the foundation came out of the local technology industry, and so they are very much interested in measuring outcomes. So we have a very sort of, it's as insisted upon the funder, a very sort of specific and somewhat aggressive project plans that have been put in place and key metrics that we had to define throughout like the various projects that we worked on and report back to them on quarterly, biannual, annual basis to keep track of where we were for all the points of the project. So it's a little bit of it's a different way of doing things, I think, from some of the other philanthropic gifts that we've gotten in the museum. But for the particular projects that this donor is interested in, it totally made sense, because we did have to establish key metrics and be able to report back on where we were, whether we were performing, overperforming, and not just in terms of how we're spending the money, but also like what the outcomes are of the money that we spend.
So this is an open-ended question, and it's partially prompted by an interview I read in Art News a couple weeks ago with Jaja over at the Jewish Museum, who said working here is like working at a 100-year-old startup. And it clicked back to this tweet that I saw, or as a slide in one of Cohen Feldman's presentations about an employee of MIA saying working here is like working at a 100-year startup. And I've since seen that phrase, that sentence appear in things written by directors and other museum employees. Are there things that really excite the museum community or your teams about the startup mentality, or things that you've put into place that were influenced by some of those, some of that dogma? I'm really curious. Oh, what an appropriate perspective.
Yeah, so Cohen's my boss. And that quote came from one of our editors, actually, who was hired out of sort of, commercial journalism to come in and work with us during our birthday year, our 100th birthday of the museum, where we ran a sprint every week and delivered 52 surprises during the course of the year, which was exhausting but pretty cool, too. Inculcating that lean methodology at MIA has been really interesting. There's enormous resistance, and we're having to work through it sort of one process at a time. But when you see staff engagement go up tremendously because of the shorter period between your sort of effort and a result is really terrific. But I actually want to roll back to the earlier question. When I arrived at MIA, we had Robert Stevens on our board. He was the founder of the Geek Squad, became a minority owner of Best Buy, which is headquartered in the Twin Cities. Managing that relationship was really bizarre. I mean, first of all, he's a font of ideas, right? So every week he's got some new idea that we should definitely be trying. And of course, there's not enough funding or enough resources to even begin until the next week when he's got yet another idea. But he's sort of upsetting the apple cart constantly because he has the ear of other people on the board. He sold out his shares in Best Buy and went out to Silicon Valley to start something new, and God knows what it'll be. It'll be interesting, right? Dealing with those sort of entrepreneurial spirit people, bringing them on our boards is really helpful and informative, and it drives us to think differently. But he got very frustrated and left pretty quickly because in his mind, nothing ever got done. In our minds, we were just constantly scrambling to keep up with whatever idea he was spouting.
Right. You know, that reminds me of something that I've cited many times, kind of riffing off of Max Anderson's old article about museums as red ink businesses. And again, I feel a little schizophrenic because on the one hand, you know, here I am saying, I think museums should really look at lean startup models, think of themselves as startups. There's a lot of benefits to be had there. At the same time, every time I hear a board member or someone else say, museums should behave more like businesses, I just, you know, my hair curls, you know, because there are such fundamental differences between museums and businesses in the traditional capitalist kind of global economy sense. You know, first of all, our core assets, our collections, cannot be sold, at least not in any mass way. It's a big deal if you're deaccessioning.
There's going to be no Met IPO anytime soon.
Exactly. Your mission mandates that you have to provide access to those core assets and all the related content and programming for everybody, regardless of whether or not those customers can afford to pay for the costs of that access. That's your mission. Thirdly, you have to do all of this forever. Right? So if you get into financial trouble, you can't just pivot the way a startup can or sell everything, declare bankruptcy, sell everything in a fire sale and open up tomorrow across the street under a different name. So, you know, those are three conditions under which museums operate that I dare say would daunt even the most successful and kind of risk-taking of entrepreneurs. So, you know, it really is a question of, yes, these are apples and oranges, but how can we learn from each other and how can we cross-pollinate? Cohen's got an answer, I think.
Well, it's not a direct answer to that, but I mean, and recognizing all of that, I also look at like our situation in Austin, which is not atypical, which is that we're a city that is mostly absent of traditional philanthropy. So like if we were to go to where the money is in these entrepreneur, you know, exactly these areas. And so something Sean said about, and Douglas, about the difficulty of working with them is, you know, in effect the Dan Aykroyd line, like, well, in the public sector they expect results. And I sense like from us, like certainly for us as a museum in a city like Austin, there's almost a reluctance to try and pursue this money, partially because we know that's going to be the case. Like partially because it's like, you're going to kind of like make us be honest and do the things that, you know, and like I feel like that's a big thing that we do have to reconcile, because like for us in a city like this, like traditional philanthropy is going away. Like we cannot continue to rely on that kind of funding. We do have to figure out how to work with these kind of funders, and like I don't know what the answer to that is, but we have to figure it out.
So I have a question for you, and also for you, Cohen, but also for the Robert Stevens problem, which is to say that it sounds like the disconnect comes, or the conflict comes, when the entire institution is forced to move at this speed. And I think that what larger corporations have done when they want to still maintain some of the advantages of startups is sandboxing it a little bit. And I don't want to conflate that with silos, because it's very different. But and I'd like to hear from both of you, because you've both brought up this point, this concern, which is that if those requests, if those rapid fire new ideas every week types of request came in through a controlled channel where there was not the entire institution required at the beginning until something was actually vetted, would that have made it easier for you to actually respond to it, and then to Cohen's point, more interested in actually pursuing such funding?
Cohen doesn't want to answer. I don't know. So like a Skunk Works, or sort of,
Yeah, exactly. You got it. Yeah.
I like the idea. Finding the time and space and money to keep it running is a little bit tough, but that's what you'd exactly ask from these kind of people. I think there's also an interesting way of combining the entrepreneurial folks who perhaps are not in the same financial position as the big corporate foundations would be, but talking to the big corporate foundations about funding that kind of operation where then you invite in the entrepreneurs. Seems like a potential path ahead for us.
Okay.
I got a question, if you don't mind me maybe shifting back a little bit. This is Desi, by the way. You guys have been talking about these different models. It's been really interesting. And on the one hand, museums can act like startups. On the other hand, museums can be the stewards of startups. So I want to go back to that part. And I'm going to do that obnoxious thing where I conflate museums with art museums. But I do think that some art museums have been doing that for a long time, having artisan residents. And granted, there's a difference, right? Now these startups, they are you're seeing at New Inc. and at Acme that these are creative startups that are coming out of it and are related to our fields. But and it's not exactly the same, that the people that New Inc. Is incubating might not necessarily be on view in their museum, although sometimes they are. But I guess my question here is, okay, museums have a history of this a little bit. And when we're talking about incubators and accelerators and whatever, all these different things, can we peel back that Silicon Valley language to look at exactly what it is that is new and interesting, and what are things we've already been doing, but we're now just talking about it in a new, innovative language?
Yeah, I think that's a great analogy, and actually, I would take it even further and say that programs like Artisan Residency, bringing those different ways of looking at things and creating into the museum has been a constant source of fresh ideas and innovation in the museum for years. In fact, when I think about my museum practice, when I'm looking for innovation, I look to two sectors. I look to what artists are doing, be it with digital tools or with audiences and kind of engagement practices in general, and I look to the accessibility sector, because both of those bring such radically fertile and creative new ways of working and looking at things that it's been very productive. I would say, however, that my experience actually of both accessibility and artists in museums is that they remain a little siloed. It's a little potted, sometimes it's a little tokenistic, and it's not allowed to permeate all of the divisions of all the silo walls across the museum. So maybe this is a good strategy for introducing, some of these approaches to museum, particularly to management or whoever needs to be brought on board, to say this isn't actually all that different from what we've been doing in other ways. We're just going to amp up the volume or increase the diffusion of those new ideas throughout the museum.
And I think the most exciting instance of merging artists, technologists with a business lean has been the new museum's rhizome 7-on-7, where they had people like David Karp of Tumblr collaborate with an artist. They had Joshua Schatcher of Delicious collaborate with an artist, and Matthew Mullenweg of WordPress, and I know we all love WordPress, collaborate with an artist, all in the presence of the cultural community and the museum community. So things like that have existed, but maybe not at the same volume. They haven't kicked it to 11 yet, but maybe in the future. So at this point, we'd love to open it up straight up to questions. And I see two individuals in the audience here from Mahuki. And we'd love to hear about your experiences.
Rowan's got the mic.
Yeah, so I am from Mahuki, so I'm going through that program at the moment. And to kind of explain the difference between Artisan Residence and what Mahuki specifically is Tapapa is actually investing in us rather than, and trying to make money from us, rather than being someone who's going to buy our products or someone who is going to necessarily personally get benefit from it. So like a lot of museums, they're now having to try and fund themselves and earn money in different ways. And our CEO has run successful incubators in the past through other companies that have then made money for those companies. And so what they're actually doing with Mahuki is saying, hey, why can't we invest in this sector? Why can't we help in this sector and bring money and profit back to Mahuki, or back to Tapapa. So they are not committed to buying anything that we do. We still have to go through the tender processes like everything else. And they actually encourage us to go to America, for example. We've been here for 2 weeks, and try and sell in America. They don't want us to sell to them because that doesn't make them money. They want us to sell to everyone else so that we get bigger, and their 6% that they've bought of our companies will end up bringing money back to them and making a kind of endowment for them.
And Rowan, not because I'm trying to introduce advertising into this session, but would you mind telling us what your company does and as kind of an example of the kinds of companies that Tapapa is investing in?
Yeah, so Tapapa originally wanted to invest in both front of house and back of house businesses. And they had about 45 companies apply for this program, or startups apply. And they ended up with all visitor focuses. So my own company is focused on web apps for the in-visitor experience. Dora, who's sitting back here, is focused on VR, so recreating museums in libraries, so for people who can't actually access the libraries, and showing collection items that are not visible normally. We have people working on games, so gaming in museums and interactives in museums. We have a company focused on how you can display artifacts with a respecting cultural significance. So they're working with Maoris who do not want their artifacts on display sometimes, or don't understand what it means to give Creative Commons licenses and then have it appear on underwear or something. So we quite a big range of what people are doing. And they really looked for who was established. So most of us were actually already established and were making money in other ways, but we wanted to move more into this cultural sector. And so they found companies they thought were already doing well, had successful entrepreneurs, and they saw as these are going to grow and keep growing, we can help out by letting them understand the museum better.
Cool, and we have time for 2 more questions.
Brenda and I were talking about this the other night, so I've been thinking about this concept for a couple of days, and one thing that I'm wondering if maybe Nancy can speak to this in her research is looking to universities and what they're doing in this sector, both because I feel like a lot of museums look to universities as comparisons for our own investments in the form of endowments, like how is our endowment doing compared to Yale or Harvard, that sort of thing. But also this idea of mission, and I feel like universities might be more aligned mission-wise with this idea of accelerators and incubators. So.
Yeah, that's a great analogy, and I think I'm going to pitch this to Sina because he was talking about this earlier.
So there's so Research Triangle Park comes to mind in North Carolina, for example, in which universities and startups and also established companies like Red Hat or IBM are housed on the same campus, and there's a lot of cross-pollination there. The way that it became that way is just freeing up some of the tech transfer, which is an idea we haven't talked about in this session, but is an interesting one to me in terms of we have in the museum space really creative, really brilliant people. And sometimes from frustration, and I can speak to this from personal experience or scarcity of resources or ability comes some really creative solutions. And right now, I would argue that the next step is not let's go make a service out of that, or let's go see if we can't scale this solution for other folks. And so I think there's an opportunity there to encourage folks within the museum to be part of this creative process. But the other thing is that universities right now are making a really big push to encourage their students, their faculty, staff to participate in the community and the business community, whether it's by helping them with a seed investment, a token amount, business competitions that are held, the chancellor putting aside some money for student projects, for example. So you're seeing this participation both at a macro scale and a micro scale with universities that I think has some tie-ins to what museums could be doing as well.
Yeah, and to add to that, I mean, there's now dozens of institutions using this from West Coast to East. You look at Stanford has, I think it's called the Start Fund, MIT 100K Challenge. They just announced a $150 million fund to invest in really, really, really hard to solve problems. At Northeastern University in Boston, they will invest $20,000 as a gap fund, which means there's no valuation, there's no equity taken until the company gets to their next milestone. So there are a handful of these where college endowments, university endowments are being invested in the people, invested in ideas to spur that innovation and growth. Cool. So unless anybody kicks us out, I mean, we have time to chat. If there's any other questions.
Let's go ahead and just end the session that way. Oh, well, do we have one more? I just wanted to make sure people could get to their next thing.
One more question.
Please.
I just want to go back to Nancy's comment earlier about the a museum should run more as a business. And I think at the end of the day, there are so many great ideas with startups of what we could do with museums, but I feel like museums, the big ones, the really big ones aside, don't have the infrastructure at all. There's no API. There's still this conversation about how do we connect to TMS. There are some museums, including some bigger ones, that still don't have a dam. But I think there's a need of getting your infrastructure in place so you can actually provide the public with access to your collection, your data. And I think that's the bare minimum that every museum should have a focus on in getting making their data accessible, so you can actually easily start experimenting with that and try out ideas like the runway for a startup to actually come in to a museum and just try that out. And we had lots of people, they send us emails we want to do this and this and that, and it sounds all fantastic and we would totally love to support that idea, but we don't have our data in place. So it's always this one-off kind of thing that just makes it super expensive, and it's very wasteful for every kiosk we do, every app we do. It's just always this overhead of building these things. So I'm just a general question.
Yeah. Do you think, and this has been on my mind, and we've been talking about a number of different instances, looking at the impact and the celebration, and of course the investment into something like the Cooper Hewitt pen. Would it have been interesting if there was a public-private partnership and it was productized and made available to other institutions where Cooper Hewitt, as the creator of the idea, had skin in the game, and it's something that it seems a lot of people in the community seem to love. I'm curious if an idea like that would ever happen. I know there's been, IMA Lab, creating a consultancy within. There's been other instances. Would that ever fly, or is there just?
I know we need to wrap this up, but also there have been a number of museums who've, including IMA Lab with TAP, for example, who've created products that they've then tried to monetize, and with mixed success, I think. I just also want to make a point to your points about. Not having an API, not having a dam. We should probably, in a next session, in a future conference, also make a distinction between just professional practices versus business practices. Having your data in order is just a grown-up thing to do. That does not make you a Fortune 500 corporate raider. It's just good practice. So we should all be doing that. Being a nonprofit does not mean that you shouldn't behave, like a professional organization.
Yeah. Well, thank you so much for your interest in this topic. It was a really, interesting conversation. I hope there were some takeaways, and your questions were incredibly valuable and insightful, and having people in the crowd from one of these incubators was kind of the cherry on top. I'd love to continue the conversation, as would Sina and Nancy, I'm sure. So, come up to us if you have questions or ideas or want to continue offline or online. Thank you so much.
Thanks.